Okay, Katrina will give you the thumb.
Oh, good to go.
Good to go now.
Good to go now.
So, welcome along everybody to the November meeting of the Carterton District Council Investment Committee, and welcome to Peter.
Thank you.
Erickson's, who's joined us electronically. I was going to get Marty to the Tarakia, but when we get to the next item, we'll realise there's an apology. So, I don't know, do we want to do it together?
Yep.
Mai te whanonga, raro ki te whai. Mai i te awa tonga, raro ki te awa raki. Tere te hapori, i ai e taratahi. Whanonga, haere mai te.
So apologies. As noted, we have Marty. We've also had an apology from Jeff, but as we discussed this morning, I don't think we need to note that because he's not officially on the committee. So I'm getting very technical here.
Move those.
Do we need to move the apologies? And we do. Do we have a mover for the apologies? Councillor Newman, have a seconder. Secretary Steve. Conflicts of interest declaration. Public forum. Not to be. Confirmation of the minutes of the investment committee held on the 7th of August 2024. Had a look at them. Do we have a mover that we accept? Apology. I can move that. Do we have a seconder?
I think I was down for an apology for that one. I was down there. Sorry, gotcha. I was reading up the top of it. Thank you.
Happy to second it.
Councillor Newman. All in favour? Aye. Investment update report. You.
Kyra's going to, she's kindly written the report. So.
Morning, everybody. It's just a couple of things I wanted to sort of note with the current investments, our total investment position. There's a lot held on call and up to 30 days. This is mainly to make sure that there was cash flow available due to the late adoption of our LTP. Just making sure that we had enough funds handy until the first lot of rates came in. Yeah. So other than that, is there any questions for that?
Yeah, I mean, that was what I was going to say, as to why we're holding everything.
Yeah.
Because clearly there's an interest cost in that. We're getting what, 1 point something, 3 or 4 point something.
Yeah. But it's all going to start flowing back out again soon. Yeah, so I guess for longer.
Saw that this morning in the audit and risk. We're outside our recommended position in terms of investment duration.
Yeah. We do normally try to use the longer periods because they usually have a better interest rate, cash flow, everything like that.
So, any questions, comments for Kyra?
Yeah,
Well, I think when we Peter gives us a bit of an update, then perhaps we can talk about the subject of the hour or the week.
Yeah.
Anything else?
Just report.
So we have one recommendation that we received in the report. Do we have a for that?
Could we have Peter speak to his part of it?
Is that
Part of this book.
Yeah.
Part of-
Oh, yeah.
Yeah,
Part of
that
this
attachment.
Okay. So Peter, the floor is yours in terms of where we're up to with the managed funds.
Brilliant, thank you. So yeah, afternoon all. I'll just have a little bit of a caveat before I start. I'm in the middle of a power cut at the moment, so I'm tethering off my phone for this one. So I do apologise if I go kind of stuttered there for a wee while. But I'll keep the soundbite short, so make sure you're all still with me. And Jonathan would love to be here, but he's en route to Nauru at the moment, just flying out of Brisbane as we speak. But in terms of investment returns, I mean, it's been a really good time for investment markets over the last quarter to September, and also over the last 12 months. You can see the level of investment returns that these funds have been pumping out of recent times. And that's largely been quite broad-based, both from global equities, which has had an amazing run over the last wee while, up 20% for the 12 months. For example, the US is over 35%, and still seems to be getting quite a bit of support from an economy that's ticking along rather well. We've seen interest rate cuts as a result of inflation starting to come in line around the world. Adrian Orr himself dropped our interest rates another 50 basis points, which was well received, and inflation certainly coming in line there. And of course, falling interest rates means you get capital gains on bonds. So the income funds from Harbour and Milford, you can see there, ended up with double-digit returns for the year, which is pretty good going for income funds. The Castle Point Fund is going along very well under the new management under Perpetual Guardian. They've made some changes to that portfolio, reduced the size of some of the investments that have been a few issues in that fund, and so that's chimed out a decent return as well. The only concern that we have at the moment is probably the Castle Rock portfolio. Not so much in terms of the underlying investments that it holds. They're investing in good companies. Those companies are still pumping out cash. The concern has been rather around the valuation policy, which is run by Castle Rock, which has been extremely conservative. So they are, forecasting more downturn in terms of the domestic economy, making it harder on the companies that are being held, and therefore starting to reduce the amount of cash that they've been distributing. Saying which, the distribution of cash hasn't changed in the last 12 months. And so the yield on the fund has actually gone from 8% to over 13% now. But that's just because of the drop in the share price, not because it's producing any more income. There's a couple of options that we have there, of course. Well, a few options. One is to do nothing, keep holding it, and wait for the price of the portfolio to recover, and the income will still keep chiming through. The second one is that all of the funds at the moment reinvest their income. Now, with that one, we could actually say, let's get that income paid as cash, so we're not adding to that investment, and then further down the line decide whether we do anything else with that investment, or indeed add another one into that space of private equity, just to diversify out of that. All of the holdings of that fund are in New Zealand companies. The New Zealand stock market, by comparison, that was up around 6% over the quarter, 10% for the year. But if you drill down into that and you look at the small companies that are in the stock exchange, that was actually a negative return driven out of that. Just reflecting the nature of our economy and how hard it is to make a buck out there at the moment. Certainly, our view on the Castle Rock Fund is to maintain the holding, not to divest from it. And if you want to make use of the distributions, or indeed send a message back to Castle Rock, then to stop reinvesting the dividends is certainly an option for discussion. In terms of looking forward, there's no doubt that investment markets are expensive, and that's why we have recommended the two income funds where both the managers are actively managing the allocation and both are looking pretty conservatively now at their allocations to shares in particular. The other one for Castle Point is that they switched out of one Schroders fund and into another. So they went from the Global Recovery Fund into the Global Value, just reflecting that they are now looking at securities which have lower valuations relative to the rest of the market, and expecting those to do okay going forward. We're not looking for more double-digit returns looking forward, but we're certainly not expecting a major correction anytime soon, although a correction is quite healthy for markets. So, bank the returns when we get them. You can see in the report in terms of the return against the objective, it is starting to snake towards that objective. We had a pretty poor start. The last 3 years actually has been probably the hardest that we've seen for markets for ages. And that was the first 2 of those 3. So, you started some way during that. But overall, the portfolio is certainly starting to do what we've designed it to do and what you were expecting it to do, and you can see that in the report produced in terms of the returns. Everything is in balance in terms of where the money is sitting. So great job in terms of making sure that the allocations are correct. And was there anything else I wanted to say at this stage? Well, obviously there's a lot going on in markets at the moment with Trump coming in for the US. Again, this is one of the reasons why we have active management in the portfolio. Typically, you find that the investment cycle has more to do with investment returns than who's in power. But with Trump, you just never know. So we're watching that very closely, and also geopolitical events around the world with Israel and Russia, of course, particularly now that the Russians have got the North Koreans involved. So we're happy with the way that the portfolio is positioned and the funds that are held in it. And at this stage, not recommending any changes other than to consider the distribution of the Castle Rock Fund.
Thank you, Peter. Leaving aside for the moment the issue of where we are with Castle Rock, does anybody have any comments or questions for Peter on the balance of the portfolio? There's not. Peter, I think you guys have been involved with the issue that we've got with the audit of Carterton District Council's annual report, I think, have you? You're across that?
That's right, yeah. No, we certainly helped out where we could there.
Do you have any comments on the issues that they've raised?
So it was around our friends at Castle Rock yet again, and it was to do with providing the valuation of the underlying portfolio. So my understanding, correct me if I'm wrong, is that Castle Rock has come to the party and provided valuation metrics now. To be honest, it was something that we haven't encountered before from an audit firm to ask those sort of questions of a fund manager such as Castle Rock. It was new to them as well. And it was all quite last minute. So we managed to get them to produce the metrics in terms of providing an independent value outside of their own valuation methodology. But I haven't heard anything more since then. Is that where that's landed?
Yeah. Karen.
Yeah. Where we got to, obviously Castle Rock assisted us with information around the valuation, and then we engaged PwC to the situation. Castle Rock's valuation is the same methodology as the previous year. And the previous year was audited, and of course, Audit New Zealand insisted on Castle Rock's current year valuation method being audited, and that won't be available until December. But there was no issue with methodology changing, and whatever, and our PwC reviewed our workings, and we have valued it correctly. So if there was an issue with any valuation, it would be immaterial. So that was the first point we back to audit. And the second point is nothing's changed over the last year. So what we are now, the current situation is that it's a reclassification of the financial statements for the last 2 years. It's a change in the balance sheet disclosures, and it's a prior period error adjustment in the annual report. So the whole matter is really around the accounting standards and the treatment of that investment, which was classified initially as a managed fund, but now that portion has become an equity investment. So we believe we've corrected it from a accounting reporting standard. It's now gone to the auditor's technical team, and they've given us some feedback overnight about just resetting the prior year's financials, which we hadn't quite done that. We have to republish the previous year's financial statements, which we weren't sure we could do that, and just get the classification and the notes in the annual report correct. So we still don't see it being the big issue that it has become, really.
Yeah, we agree with that in terms of the scale of the issue. I mean, we have a lot of exposure to this sort of legal structure, which is a limited partnership, right throughout all our portfolios. And we've never encountered this before, Karen, to be perfectly frank. Jonathan directed Audit New Zealand towards a few of our clients that have got exposure to this particular fund, to show how they've done it time and time again through audit. Obviously different audit. Oh, actually no, one was Audit New Zealand, wasn't it? Just a different person. So I think with it behind us, it won't be an issue going forward. But I am amazed that you would re-audit something where nothing's changed. But anyway, that's audit for you.
Thanks for that assurance, confirmation.
Dale?
Thank you, Mr. Chair. Just a question, I'm not sure whether to Peter or Karen, but the pros and cons, or the benefit, or Kyra, sorry, the benefits to Carterton District Council of reinvesting the distributions. Peter mentioned that was something that maybe we want to discuss. What going forward, is it more beneficial to council to keep reinvesting and growing the egg, or are we better to take the distributions out and use them to offset some of our other?
Can I add to that question?
Sure.
And I mean, to evaluate your answer to that question, I just need to know, what did we put in? What have we since reinvested through distributions? What is that total? And where are we today? I mean, I'm from my look at the numbers, we've lost money. The question is, how much? And then Councillor Williams's question for me, that's the nub.
Right. In terms of all of those numbers, Karen, I'm not sure, Kyra, I'm not sure if you have those.
I don't have
fingertips.
I don't have them at fingertips, but we could have a look and get back to you with the amount of distributions, because at the moment they go back into the fund, and then when we so the loss would probably be significantly more, but I would because you're adding to the pool each time.
So we've thrown, one could be forgiven for saying, on a loss-making investment, we've thrown good money after bad.
more money into it, yeah.
Yeah.
So the losses are not necessarily 700K, or was it 70, what did we say?
54.
54K, the losses, if you take into account the
Yeah.
distributions, could be higher than that.
They could, except I think, correct me if I'm wrong, Peter, but when these, the distributions are reinvested, we get effectively more units. Is that how
Yeah.
it works with this investment?
Yeah, well said. So the distribution is around about 28,000 a quarter on an investment that initially was $1 million. And with a fallen share price, you're purchasing the shares at lower prices. Therefore, you get more units. So over a long-term investment, I mean, it's called dollar cost averaging. You essentially get applied more units than you otherwise would have, and then you can actually make a better gain going forward as a result of that constant investment as the share price is falling, and then get all the upside as it recovers. So that's one side of it. Definitely, I guess we flagged it because this is something that does put out quite a bit of cash on a regular basis, and whether that's of use as a cash base rather than reinvesting into this particular fund. When you look at other funds, I mean, if you consider, say, an equity fund, typically the dividends are reinvested into the fund, and that's the growth of the fund. So we're looking at a total return when we're reporting the returns of Castle Rock. And as I said previously, they aim for an 8% distribution rate per annum. They're currently sitting at 13. So it's essentially, if they did nothing to the share price, that's a double-digit return right there. They are projecting, lower distributions going forward because of the difficulty of the New Zealand economy, but to date that hasn't happened.
Yeah. I've done a little bit of work on this over the last day or so. So the valuations of the underlying companies that reflect the share price, they're done by Bancorp, is that right?
That's right. Yes.
And there's some sort of relationship between Bancorp and Castle Rock? According to
Bancorp owns Castle Rock.
they finance it.
Yeah.
They own it.
I mean, it's not too dissimilar to most private equity in terms of valuing an underlying company, because it's not like a share which is valued daily on a share market. You have to actually have a valuation done. But I mean, all of these valuations, all of these accounts are independently audited. So yeah, that is the case for these. So.
But we don't have the audit.
We don't have the audit for the year just gone. We do for before.
Yeah.
So they're effectively valuing these themselves.
Yeah, which is the concern raised by Audit New Zealand.
Yeah. But you're saying that probably because of that, the evaluations are very conservative. Is that what you think?
Well, their policy of valuation is conservative.
Yeah.
I mean, what we're seeing is a distribution which hasn't changed, and yet the share price is going down. Which they're saying is that they look out 2 years hence and say, what's the impact likely to be on the capital value given the cash flow.
What's the company? Bancorp. 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 So they're valuing these looking forward.
Well, I mean, if you consider most valuations, it's on a forward-looking basis. So it'll be, discounted cash flow basis looks forward, for example.
Bancorp Premier Vehicle.
Okay. So the other issue that we touched on before around whether this is in our terms as an equity investment or a managed fund, how do you view it?
So the thing is that to us, an equity investment is an investment into a company that makes stuff. So Microsoft or Nvidia or Spark, whereas this is actually an investment into a fund which then invests into companies. So it to us is no different than investing into, say, the Castle Rock Castle Point Fund, which then invest into listed companies. The only difference here is they're not listed on the stock market.
Right. But it seems to be the
Castle Rock. Yeah, Castle Rock
limited-
themselves don't actually make anything. They're just a fund manager.
Yeah.
So,
But it's the limited partnership
yeah,
thing that makes the difference, isn't it? The structure of it.
That's exactly it. It's the legal structure that has made the difference for Audit New Zealand. And if you consider nearly all rather, private equity funds are structured as limited partnerships. They must classify all of those as equity investments as well. And if you look at some of them, like, one that we deal with a lot is, say, Continuity Capital, which actually invests into other funds. But they're a limited partnership. So under this definition, they would go down as an equity. So, I mean, personally, it is a managed fund. It is a group of people operating a fund that invests into underlying companies.
so the technical difference of opinion from Audit New Zealand, and has been that the structure of this does not meet their new definition of what is a managed fund. They are looking at this as an investment in another limited liability company that manages a managed fund, and therefore we're shareholders in that limited liability company, and we're joined to them through a shared partnership agreement, which I haven't seen, and I don't, so therefore can't understand. And where I'm sitting here as the mayor, and my council being aware that we're responsible for for managing ratepayers' funds and investments wisely, but I'm really and I'm caught between a view by Audit New Zealand and your view, one which says this is highly unusual for a local government entity to be in this type of a structure, and it's risky. And another view is, no, this is business as usual. Commercial enterprise does this all the time. Where do we get security, right now from, in terms of understanding those two different points of view?
Possibly have a chat to another one of our local authority clients, Northland District Council, that has quite a portfolio of these types of investments. And I'm sure there's others out there that are probably advised by others. So, it's nothing new.
What does our risk liability look like? Have we got a risk assessment? So Bancorp own Castle Rock, and Bancorp, and I know you're telling us that one of the Castle Rock directors has moved on. There's only two. I don't know who they are. I don't know their backgrounds.
We can provide that. And Andrew moved on because he got a good job offer.
But if Bancorp were conservatively keeping the valuation low, that impacts on our dividend, doesn't it? That impacts on our gain. And if they were to to get into trouble, or if Castle Rock was to get into trouble and to be liquidated, our value would be zero, wouldn't it? Well, our value would and I've got nothing to tell me the strength or otherwise of Castle Rock's, other than the fact that I know one of their key directors has left. I'm looking for security. I'm looking for confidence.
I hear that.
I have no information on at all. All I do know is that Bancorp, one of the directors of there used to be John Kippenberger, who was Premier Beehive back in the old days.
Yeah.
That's all. I just don't have information to give me to be able to balance that what all New Zealand's saying.
No, totally hear you. So what we can do is to provide you with that information and hopefully assurance in terms of what you're invested in and what your liabilities are and how the returns are delivered to you. I mean, the fund's been going for a very long time, but and like I say, it's the most common structure for private assets. So yeah, we can do that for you. I guess the issue here has been how it's been audited and how it's represented in accounts. Yeah, we can certainly provide information about the relationship between the parties involved and what being a limited partnership or a limited partner actually involves for council. And then once you have all of that, we do know that there is money still going into this fund. So even though private equity isn't a liquid asset class, power's back. We are likely to be able to have a liquidity event if indeed you read everything that we gave you and thought, no, this just doesn't feel right for us. But as I say, there's at least one council that we know that's in this fund, and a raft of other clients such as iwi settlement trusts and charitable trusts and so on.
Thank you, Peter. Thank you.
No. Yeah, just following up on that, it'd be interesting to maybe make contact with Northland District Council and ask if audit have asked the same question of them
In Christchurch.
as, at other councils. And if audit hasn't, then the question back to audit is, why have we been singled out?
Are they audited?
Pardon? Sorry?
Are they audited by New Zealand too? Would it?
Yeah.
Oh, yeah.
Very valid. Very valid. Yeah, no, I'm curious to know why Christchurch, what Christchurch's views are.
Karen, is it something you can?
No. PwC to Christchurch and Northland. We don't know. Yeah.
Okay.
That's good. I'm fine.
Okay.
Get that information. Great.
Just a couple more questions, Peter. One is this really relates to the HQ travel group. That's kind of new to us, I think. I don't think we know about that. So that's the latest.
That's right. Yeah, that's the latest edition. Oops. Sorry, what's just happened there? There we go. That's the latest addition into the Castle Rock portfolio. I believe we put a note about that into the report, but if not, we can certainly provide more information on that. And Castle Rock has as well. They produce a quarterly pack which goes through all of the investments in the portfolios in some detail.
I just wonder if you can tell us what it is and what it does. Just we know about the hairdressers and the horse transport, but was it further information?
Yep. Just gone a little blank on HQ Travel, other than the fact that it's a travel company, but I can get that for you.
Google says that it's one of the world's leading providers of impact adventure and educational travel, home to 2 market-leading brands that facilitate life-transforming travel experiences in over 60 countries.
Okay.
Wow.
But it's a New Zealand company.
Yes. It's a New Zealand company. Yeah. Oh, yeah, that's basically what I've got. Thank you for leading me to the go on that one.
So, their page or an independent page? No, of course they're going to say that. Okay, it's good marketing.
Revenue over for the New Zealand economy.
Wonder what Ministry of Education things.
But your report on Castle Rock also says the share price fell 3 cents from 91 cents to 88, fall mainly due to the recognition of the transaction costs of the HQ Travel Group acquisition. What happened? I mean, how does that work?
So when you invest into private equity, there's quite a bit of expenses involved in the origination of investment. And so, when they take on a new investment, all of the expenses of taking on that investment go into the portfolio. The difference with this private equity fund is that it's open-ended. In other words, you can come and go and apply every quarter to this, whereas others are more closed-ended, which basically means that they will call your capital from time to time. And when they first start up, when they're originating investments, you end up with quite a negative return coming from those portfolios, because they'll call capital, which pays for the expenses of the origination of taking on new investments. And then as those investments are put into the portfolio, as the management of the private equity manager gets involved with the management of the firm, as does Castle Rock, then they reshape the portfolio, start to make better returns out of it, and that's when the the real returns on capital comes through from the investment. It's called a J curve, so essentially it goes down for a while and then starts to pick up, and then really takes off once the investment is in the portfolio for a period of time. And you would have seen with the companies that Castle Rock has put in here, that the directors include Castle Rock staff on the boards of these companies, so they have direct influence over the management of the businesses. And then the sole intention of their position on those boards is to make sure that the company is focused on generating returns for investors.
Anything else for Peter?
Just probably as a point of order, Mr. Chairman.
Yeah.
Peter, in his opening comments, suggested recommendations, but we don't have those as recommendations in for us that we might like to consider one of options out of three possibilities. Do we wish to address those? Yeah.
My view is we should probably wait until Ericsson give us the better picture of what the structure is and what the implications are before we start to work out what to do.
Yeah, just a comment around that. The fund only transacts quarterly, so the next opportunity is 31 December.
No.
We would need to meet specially.
Well, we'll see what comes back, and then we'll decide whether we need to convene a meeting specially.
Yeah.
Could we do that?
Yeah, because yeah.
Okay.
Right. Back to where we were. Oh. Steve?
I'm happy to move that we received the report.
Okay.
Cheers.
Steve's moved that we received the report. Do we have a seconder?
I'll second it.
All in favour? That was Councillor Newman.
Okay.
All in favour? Aye. Carried. Scrolling. As we were up to. Use something a razor blade. No one remembers that.
No, yeah.
Steve, do you want to do the card here?
I think we should perhaps do it together again.
Okay. Kia whakaria te tahu, kia wātia aitia, kia turuki whakataha ai, kia turuki whakataha ai.
Thank you, Peter.
Thanks.
Thanks,
Thank you,
all.
Peter.
Good to see you.
Okay.
Okay.
I think we have clarity in the mud pond.